and welcome. You're with us here on Business Today. I'm Aabha Bakaya, tracking all the market action for you. Let's take a look at how things stand as we enter Friday. Remember, it's been a busy week, a truncated one at that, and markets have consistently been sort of under pressure with regards to all the mixed geopolitical factors and uncertainty taking place, while metals, of course, have remained a hotspot in regards to safe haven buying as well as global prices on the back of investment demand. So that's gold and silver for you, and we're seeing the resulting impact here with regards to stocks and ETFs and all of the other ancillary names as well that have been reacting on the back of that trend. All right, let's bring in Shell as well. Shell, even in the pre-open this morning, the ticks are not indicating anything much to write home about, slipping closer to 25,600 on the index. And at this point of time, no major cues right now that we can really track as we head into opening.
Yes, a very good morning to you, Aabha. And on the last day of the week, as far as the fortnight is concerned, things are brightening up only for the PSU banking basket and the metal basket. The indices, as you very well put, are in sideways to weak zone, impacted as they are by geopolitical developments. But there's no stopping PSU banks, ladies and gentlemen. There's no stopping metals. Therefore, any dip there is an opportunity to get back into it. Apart from that, the capital markets segment is doing pretty well. As also you have CPSC index, the entire PSU basket, as well as commodity sector doing phenomenally well. So focus on stocks that are showing breakouts, double top buys, and of course momentum on volume. Aabha.
Okay, let's go deeper into those PSU banks. Then Shell, is it again just the same three names that we're looking at?
Yes, Aabha, we are just focusing on, of course, PNB, Canara Bank, BOB, the big one, of course, State Bank of India, and Union Bank. Remember, the results have been very, very strong, and these are the 4 or 5 banks that I'm looking at. Earlier, we've been talking about the CPSE, PSU banking Bs, which are a fantastic setup. And in terms of ETFs, so those 2 ETFs have done phenomenally well. The PSU banking ETF by Nippon, as also the CPSC ETF by Nippon AMC. These 2 for those who want to sort of do it in an easy going manner, but for those who want to sort of dabble in individual stocks, strength in PNB, Canara Bank, BOB in particular, Union Bank as well, SBI, of course, the big daddy of them all. Strength there, and you need to consult your financial advisor and technical advisor as well if you want to get into it on the long side.
All right. That's the PSU banking space. IT earnings, of course, we've seen a whole bunch of them out. And despite the fact that TCS and HCL had some positive surprises, markets factoring it in as neutral. Infosys also now reporting earnings and overall in line with estimates. No major uptick that's come in on IT on the back of those earnings so far. Today, well, the pre-open is showing some amount of gap up for Infi, 4% higher. But overall, we've really seen the market settle and not seen any kind of major trend reversal, so to speak, on IT at this point of time. Let's see how they actually open up, because right now in the pre-open we're seeing some pretty strong opening ticks coming in. Let's take a look at the overnight action on tech globally and see if there's any trigger coming in from there as well, or this is just purely on the back of earnings that we're seeing this kind of reaction coming in. Let's pull up the global indices and tech in particular and just see where we're at on that. Remember, there hasn't been any kind of action on the trade deal. When it comes to tech, we saw Alphabet hit the 4 trillion mark. We've seen, of course, continued gains when it comes to the likes of Musk's companies and, of course, continued AI action across. So while that valuation question continues to be on top of everyone's mind, we haven't seen any kind of real slowdown when it comes to the kind of gains we've seen across those tech majors globally as well. Still awaiting just to pull up those charts for you on your screen. But Shell, let me come to you, because in the pre-open at least, we're seeing a nice gap up on IT today.
Yes, Aabha, the problem with pre-opens and gap ups is that they get sold into the first 15-45 minutes of trade. So it's a little difficult to trade the index in a manner which is cutting both sides on the top as well as bottom. I would focus on consistent trends, and those are visible in the metal space. Those are visible in non-ferrous metals. On the aluminium space, look at National Aluminium yesterday, day before yesterday, hit a record high, and I have no doubt in my mind that Hindalco will follow suit. Look at the metals space on the ferrous side, Tata Steel, very strong move pending there, a record high in the making there as well. So, why look at things which are vacillating, which don't have trends within them, and trends are also getting chopped? Look at secular moves, and they are coming into the metals basket, the PSU banking basket, and of course commodities, as also the entire PSU space ahead of the budget. I would rather go for stronger probabilities than looking for just a gap up or a gap down.
Okay, fair enough. Let's also just pull up some of those stocks in news. We've got a whole host of names that we might see reacting on the back of certain news triggers as well, and I'll just pull up some of those for you. But we've also got Mayuresh Joshi joining us this morning. So Mayuresh, good to have you with us as always. I feel like the last couple of weeks we've just been treading water, so even I'm like, what do I ask Mayuresh this morning? How has the world changed since last week? But what do you say? What should we be looking at today, Mayuresh?
Morning, Aabha. Morning, Shell. I think it seems to be a positive start as far as sentiments are concerned. But what really goes on in front of the geopolitics over the next few days and weeks will still have a say in terms of how markets behave. However, I think two positive things. One, I think in terms of earnings, a large part of the expectations is that earnings should be relatively better in Q3. With the kind of trends that we've seen in Q2. And therefore, I think earnings should start holding out as we speak. And second, I think in terms of budgetary expectations itself, the large part of the market expectation is that it should be a well balanced out budget, both in terms of the fiscal number, the current account deficit number, the kind of capex spends, the bank borrowing. And in my opinion, and our opinion at Markets with India, no tinkering as far as anything related to capital markets is concerned, which will be a huge positive also. And therefore, I think both these aspects should play out. If geopolitics turns out to be a lot more saner and better over the next few weeks, that will probably add fuel in terms of what we've probably seen. So again, I think hopeful and optimistic for some element of a reasonable bounce back and a rally into the markets. It will be stock and sector specific, but in my opinion, I think I do not foresee a structural downside for our markets.
Good morning to you, Mayuresh. A very warm welcome, and of course, a happy new year and best wishes for Makar Sankranti. At William O'Neill, any 2 or 3 stocks that you're looking at as far as research-based outputs are concerned ahead of third quarter earnings?
Morning, Shell. Great season greetings to you, Aabha, and the entire team at Business Today. Hope you guys have a fantastic year full of good health, wealth, and prosperity. Nestle India is something that we've recently added as a momentum pick at Markets with India. Our sense is that FMCG as a pack generally should have better numbers. Nestle India anyway had a decent and a stellar quarter in Q2. And if they're able to build on that in terms of volumes, in terms of their sub-segment performance, whether it comes to confectionery, milk products, infant care, etc., and input cost remaining largely stable on a quarter-on-quarter and a year-on-year basis, you might expect a decent and a reasonable set of numbers as we head into this quarter itself. So preempting a strong set of numbers from Nestle India. The PSU banks generally, I think, have held up pretty well, even in the downfall, Shell. And therefore, our own sense is that PSU numbers should be relatively better. The numbers which have come so far have been stellar. Look at Bank of Maharashtra, look at Union Bank of India. They have posted very good set of numbers. And therefore, I think out of the large banks, State Bank probably seems to be well poised. Even with a large base, numbers should be relatively.
Okay, so PSU banks um, is definitely the theme that both Mayuresh and Shell have flagged this morning. Um, what about IT, Mayuresh? I was picking up the kind of up move we're seeing in the pre-open. All the earnings are out. Now, post TCS and HCL, we still saw a subdued reaction, but today we're seeing a phenomenal uptick post Infi. So, is it the Infi effect, or is it now that we've seen all the numbers out? Infi has, in fact, raised guidance, and that may be what is really, inspiring the markets.
Absolutely, no two ways about it. I think Infi's guidance and the numbers have probably led to the kind of move that you're probably seeing. And the market is expecting that at some point of time, as you head into Q4, this current quarter, how discretionary spending patterns will evolve will definitely determine the trend for the coming year. But generally, I think looking at the entire argument between AI and our business models that our IT companies are having. Obviously, the need for continuing with business outsourcing is still expected to continue. And therefore, I think as models evolve, specifically on the AI front, which all these companies are doing in a hyperscale mode, if I may put it that way. I think the next few quarters might be steady state, but as they scale up, both organically and inorganically, as far as the AI business is concerned, I think the general trend going in numbers after FY27 might be looking positive. Valuations, as I said, for large cap IT are cheaper compared to mid cap IT, and therefore being selective is key. But yes, Infi's numbers were much better than what the street probably expected, and that is what is giving impetus to the sector as well.
9:13, Aabha. I think IT will be the spotlight today. 1.6% higher on the index itself. That's a 600-point uptick on the IT index. In particular, we'll keep an eye out on Infi, on TCS, and of course the two small ones, Coforge and Persistent. What are you watching, Mayuresh, in terms of the metal space?
So I think base metals have done phenomenally well. Whether it's in copper, in zinc, to a large extent, Nalco, Hindalco has also participated. So I think base metals have done a large part of the rally. I think the next move can actually come from the steel stocks. So ferrous players can actually have a good say into the market. The anti-dumping, which are the safeguard duties introduced, obviously abets, and therefore I think the next leg of metals might actually be carried out by the ferrous stocks in a row.
In fact, the Taiwan Semiconductor Manufacturing Company is, is significant in the sense that chip stocks were among the market's biggest winners in the session after Taiwan Semiconductor Manufacturing Company looked to invest 250 billion in the US chip making under the new trade deal. So that's boosting semiconductor stocks at this point. We'll pull those up for you as well. This morning just to see how they're spiking, but that was definitely in action as well. Okay, I think we've got opening ticks on your screen, 25722, a small uptick on the index, and I think that's largely driven by IT this morning. The Nifty Bank is steady, just a marginal tinge of green right now, but it's IT all the way, 1.5% up on the IT index, and auto about 0.2% up. Let's pull up the gainers and losers and just take a look at some of those individual counters. I think you'll see green across the screen when it comes to the IT majors. Infi Wipro, that's top of the charts. Infi's up about 4% this morning. M&M from the auto pack, Nestle, then you have TCS again from IT. ITC is also up about 0.8%. So these are your major contributors this morning. NTPC, Tech Mahindra bringing up that list. On the downside, fair amount of weakness coming in. Zomato, Ciplo, Apollo Hospitals, those are heavy knocks coming in, 3-4%. ONGC, Sun Pharma, Bharti about 1% down this morning. Looking at the kind of steep knock we're seeing on some of those names, Mayuresh, one could deduce that the market sentiment is still fairly bearish. So while we may be seeing, a burst of green on the IT names on the back of what we've heard from Infosys, overall we're still seeing a fair amount of bearish pressure.
Yes, because I think there is still some element of doubt as far as discretionary orders are concerned, what pricing these orders might come through. And therefore, I think it is going to be a very specific action, specifically with the new labor codes kicking in. There's going to be a one-time impact, as we've seen from the numbers so as far as IT majors or the tier two companies are concerned as well. But generally, I think trends should evolve in this quarter. But mid-cap, I think the trends going by precedent and how the quarters have played out seem to be a little bit better placed as we speak.
Well, ladies and gentlemen, let's dip into the market. It's a very cautious start, although the IT index might show you signs of extreme exuberance. Now a 2% uptick on the Nifty IT index, which itself presages a wonderful rally in the making. Let's just look at the CNX IT index. Okay, this is a very interesting setup that's coming in. What you see is a gap up. Let's see how strong it holds. Now 2% higher, but broadly the markets are modestly in an uptick. Remember, this is also the last day of the week, and we'll be getting over with the first fortnight of 2026. So advanced declines is almost even Stevens. You have 1227 shares in the green, 1000 in the red. IT index, as we've been talking about, in top shape. Nifty Realty Index 1.7% higher. PSU banks firing away, and also helping the PSU banks is HDFC Bank 924 for you. PNB days high 131. You have Canara Bank days high 155.8. Bank of Baroda 310 fresh record high, and these are the stocks that we've been telling you in and out over the last 1 week or so. Look at dips and get back into a very, very strong rally. Look at Indian Bank 852. This was at 810 on Wednesday. The dip has been purchased, and that's what strength is all about. A bit of profit booking on metals, but I won't be too worried about it. Aabha.
Okay, fair enough. Few other names. I think we're seeing Bazaar Style Retail up 10%. They've got a board meeting coming up to consider a fundraise. Curnex Microsystems is up 8%. They've bagged a 2,465 crore coverage deal from Indian Railways. So that stock's up, Curnex Microsystems. Let's pull that up for you, 8.5%, 9% right now. Mayuresh, we've got the budget coming up. Unfortunately, this time on a Sunday. It's about 2 weeks to go. So we have started to see some of these order wins and deal buzz across rail counters and so forth. How much are you really eyeing this? I mean, some of the other experts we've been speaking to have just been saying that the budget is a non-event this time. But would you look for any kind of upside in some of these pockets?
No, they always react, right? Once the budget announcement is done and once we come closer to the budget. So as I said, I think it should be a well-balanced budget as we head into 1st Feb. But generally, I think the trends in terms of infra spending, capex, fiscal guidance is something to be watched out for.
Mayuresh, given that, public capex has been slow, or at least not up to the kind of mark that the government has been aiming for or calling out for, do you think they will be forced to kind of draw out some kind of outlay for public capex? I mean, assuming they have the room to do so, because I mean, either they do that or they continue to try and boost household income, which they already did last budget.
Excuse me for that, Aabha. I think I have a bad throat.
Okay. Yeah.
No, I think there should be reasonable amount of allocations as well.
Take a minute, Mayuresh. Please have a glass of water. Just take a minute. No stress at all. We'll come back to you on that. Meanwhile, Waaree Renewable Technologies is up about 4%. Let's pull up that counter for you. The company had a profit of 53 crores, PAT at 120 crores, and this is a net profit of 53 for the last quarter, while overall profit stood at 120. And in the sense, They've also got a fair amount of positive traction coming in on their order book as well. Zen Technologies is up about 6%. The company has secured 400 crores again in defense contracts. So if Mayuresh is feeling better, I'm going to go back to him. I know we were talking about rail earlier. Now we've got defense also moving. Zen Technologies up 6%. And that's exactly what I was saying, that some of these government order related counters are all moving ahead of budget. More on public capex and structural shifts. Mayuresh, if you're feeling a little better, I'll come back to you on that.
Oh, yes. No, I think the capex outlay should be very reasonable and very good as we speak. And therefore, I think the budgetary allocations that might happen within the capex budget that the government will decide, defense will get a good share. You're going to see infrastructure get a good share as well. And therefore, I think as the budgetary allocations play out, a large part of these order wins will start getting translated over the next few months and next few quarters, which is a huge positive for India Inc. Let's also not forget about that private capex, which largely had been lagging for the last so many quarters. In the past couple of quarters have shown signs of picking up. We're definitely seeing green shoots come through. And as private capex, more orders start coming through, as utilization levels picks up across industries, the private capex itself will act as an enabler for GDP growth as well. So it's a multiplier effect which might actually play out.
All right. Reliance is mildly up today. Q3 results will be out today. You know, they always pick a Friday. And I don't know how late those numbers will come out today, but as always, they keep us on our toes until late Friday evening, Shell. Up about just 0.2% right now ahead of those earnings, and has been in the news for all kinds of wrong reasons recently, even though the stock has, of course, allayed any market apprehensions on the same. But Reliance of late, what do you feel could be the key trigger? Everyone's been watching out for when they might list Geo and any other kind of guidance, for instance, on the back of some of those new businesses. But is there anything else you feel the market will be eyeing in terms of commentary?
Well, Aabha, I think Reliance is a victim of a lot of geopolitical actions of which it has little or no control, at least what is visible to us. Therefore, you see this selling pressure on it. We've seen 1610 fairly recently, and now dwindled to its 200-day moving average. Be that as it may, there is so much of unpredictability in the oil market globally. Iran is in pain. Venezuela, we've seen what's happened. I would just not say anything at all. We'll just wait for the market to take its own due course. But around 200-day DMA with the potential of a telecom IPO, I would be very hopeful.
Okay, let's take a look at metals. And my God, Shell, we've gone half an hour without talking about metals. This is like a new record given all the action we see in metals lately. Mayuresh, I'm actually seeing some profit booking this morning. Unbelievable. Copper's down 2%. There you have it. So one trend there kicking off. And I mean, you know what? Everyone's been talking about volatility, especially in silver, which is not entirely unexpected. But perhaps they're asking whether or not it's the beginning of a cool-off on metals, while right now it seems uncertain. What's your take, and what would you be looking at within the basket?
No, as I said, I think, yes, it seems to be a case of profit booking. There are phenomenal moves in 1 month itself, and therefore I think base metals have done exceedingly well. Geopolitics added to the fire, but with Trump's statements coming to and some cool off on geopolitical tensions, you're obviously seeing some element of profits being booked. And there has been a huge rally. No two ways about it. And as I said, I think at this juncture, we'll be inclined to go with the ferrous stocks because our own sense is that the kind of moves that the government has done, specifically when it comes to safeguard duties, not only increases the end product prices, but also will help lift up EBITDA and EBITDA margins for a whole host of cement companies and ancillary plays as well. So I think the next move in like in the metals rally can be the ferrous play.
9:26, ladies and gentlemen. For the moment, we are just quietly watching action on the long side. Look at the Bombay Stock Exchange, 1.6% higher, 280, 2882. There is strength coming into MCX as well. Let's look at record highs today. Whenever Mayuresh is around, I love this opportunity to tax his brain with good questions on whether to chase momentum or not. MCX, Mayuresh, your plans here. 1.6% higher, fresh record high. A clear play on silver and the strong metals, Larry, that we are seeing as an exchange. This one makes money whether traders make it or not. A view on MCX post the stock split?
No, so stellar move, and you're absolutely right. I think base metals rally and volatility have both added in terms of the average daily traded volumes on the commodity exchange MCX, and therefore I think with more contracts expected to get added, newer contracts expected to get added, more market participants expected to get added in terms of market depth, and the new optionalities that the exchange is working out, I think it seems to be a lot more positive going ahead as well. However, at the current juncture, as we look at their EPS ratings, RS ratings, the stock is trading well above its pivot levels as we speak, and therefore having a fresh aggressive entry at this point of time is not warranted. Anybody holding can hold on, but again, fresh entries at this levels. Because of the extension of the stock in terms of the sheer momentum that it has carried over the last few months, I think it's better to just let the stock cool off.
All right, that's on the MCX. Let's talk about the broader markets, Mayuresh, because that's where the pain is and there's no real respite. Right now, for instance, in HBL Engineering, they've missed a tender. Even though they're maintaining their revenue target, the stock's down 12%. There's so many other such examples of earnings or disappointments or, small triggers that the market's reading into for sell-off, deep sell-offs on some of these stocks in the broader markets as well. We haven't really talked much about that. Everyone's focused more on the macro picture and the index at this point of time, and it's been the case for a while. So what does an investor do? What's the right strategy in terms of if they're sort of looking, or if they're already invested in the mid caps?
So you have to be very selective, Aabha, because I think what is really going to transpire is how earnings are going to play out. Now, a large part of the mid-cap universe, if you probably look 2 and 3 years behind, and the prices thereof are still up, even after the correction that we've seen, 2x, 3x, 4x. And therefore, to justify the kind of moves that they've made in a 2-year time frame based on earnings trajectory will depend on sector and specific stocks. So you just can't go out there and blindly start buying stocks. Sectors which are probably looking in terms of our sectoral allocation, PANRE, which is a universal and institutional software that we carry. A few sectors which are looking in a confirmed uptrend, as I said, which are looking really good. Selective BFSI, as I said, selective consumer discretionary, as pointed out, selective FMCG, as pointed out. And therefore, I think certain pockets will do well. Certain pockets which are looking into a rally attempt are infrastructure, including sub-segments like cement and something like realty, which has gone beaten down. But we'll wait and watch and be selective. So I think you have to be very, very selective in these.
9:30, ladies and gentlemen. The first 15 minutes have lapsed. Thankfully, the markets have been able to hold on to those very precious gap up gains. It's getting better and better for the Nifty IT index, 2.6% higher, 38,800. And Aabha perhaps will recollect that one of the advices given on the IT index was to go long on ITBs long time ago. This is again an ETF that's doing extremely well. We had discussed this at 38. It's now at 42. Again, you need to speak to your financial advisor to get into it, if at all, depending upon how your portfolio is structured. But taking it away, Infosys 1682, a very strong move coming in post the gap up. What you see is strength in terms of a 4.9% uptick. Let's look at the top contributors to the Nifty in terms of gains and points. Of course, Infosys will be there because it's an index heavyweight. There it is. Out of 47 points, 60 points on the green side have been contributed by Infosys. It's truly understandable because a lot of stocks are also contributing on the downside. So Infosys top gainer 5% higher. Can't remember the last time you saw a 5% positive gain on the Nifty on Infosys. Reliance in the green, contributing 8 points. M&M rocketing at 3694. L&T, Tech Mahindra and Wipro. So it's a tech day, ladies and gentlemen, and pulling the Nifty down is Bharti Airtel, Eternal, ICICI Bank, HDFC Life, HDFC Bank, Cipla. So that's the structure of the market. Has the advance decline ratio improved? Yes, no, not really. Actually, the decliners have increased from 1000 to 1100, so that's bad. But profit booking in metals, the dip, ladies and gentlemen, I'm talking about is there. Please be very, very cautious on the long side trades, but look with gleeful hands and happiness if you are getting metals cheaper. Lot of strength in the market at this point of time. Aabha, what are you watching?
Okay, thank you, Mayuresh, firstly, for joining us, and I hope you feel better and get some rest this weekend.
Thank you so much, Aabha. Thanks, Ed.
Welcome in Kunal Pramar as well. Kunal, good morning. Let's take a look at the index first and the kind of levels that you're tracking and what's standing out to you.
Well, good morning. And if you talk about Nifty right now, trading at 25,693, up by 20% only. But overall scenario looks very weak at present level. Nifty is trading below its 25,900 level. So there is we may see some kind of further profit booking in the Nifty up to the level of 25,400 to 25,300. So downside is still open in the Nifty, whereas if we talk about upper side resistance, then 25,900 may act as a strong resistance. If Nifty sustain above this level, then yeah, we may see some kind of upside momentum even up to the level of 26,200 to 26,400. So overall scenario at present level looks like sell on rise would be the fruitful strategies with strict stop loss of 25,900.
Ladies and gentlemen, I'd just like to mark an event in the life of Kotak Bank. This is a stock split that's reflecting in front of you, 5:1. So if you held 100 shares of Kotak Bank, now you have 500 there, and this is against the backdrop of the stock doing nothing for the last 5 years. So that's how it is. So please don't get worried about how the price has moved from 2000 to 427. That's the stock split that has come in. Keep an eye out on that one as well. Taking it away, PNB. What a rally, 131 for you as far as PNB is concerned. Let's see what the chart structure is. This is the highest that we've seen in PNB since July of 2024. So breakouts compared with the volume as well, actually June 2024. So that's an easy 18-month high for you. Keep an eye out on all these breakouts, ladies and gentlemen, followed by volume and good price action. You see a lot of positive moves coming in. Kunal with us. Good morning to you, Kunal. A view on PNB maybe?
Well, if we talk about PNB right now trading at 131, and overall chart looks very attractive at present level because stock is trading at 52-week high, and stock has recently given a breakout of its recent top, which was placed at somewhere around 120 or 128. Now, if you talk about further going scenario, then further upside would be there, further march would be there up to the level of 142, and if stock break this level, then further upside would be there even up to the level of 160. So overall technical setup gives some kind of confidence this counter, whereas for now, if you talk about new entrant, and I am not recommending to get into the stock for fresh position because risk reward is not that much of favorable for creating any new position. But yeah, if you have already position in this stock, then hold this. We may see a good upside momentum up to the level of 148 to 160.
Let's talk about IT, Kunal. Pull up the IT index and pull up an Infi today. What's your favorite pick in the IT pack?
Well, IT is the only sector in today's trading session which is holding, which is giving its helping hand to Nifty, and based on which Nifty is trading at 25,700 up by 38. Now, IT is IT sector is trading at no a very good level, and no, it's up by 1,000 points because of Infosys, emphasis, Wipros, and all. And yeah, definitely, if you talk about Infosys, right now trading at 1680 at a very good level. If stocks sustain above 1695, then further upside would be there up to the level of 1860. So yeah, we may expect some very good rally in this counter above 1695. But yeah, I'm not recommending to get into this stock for creating any fresh position, because risk reward is not that much favorable. But yeah, if you have this stock in your position, then hold as of now. But yeah, one to two stocks are there which looks very attractive, and first stock is Wipro. Right now Wipro, the way stock has been trading on its daily chart above its 20 and 50 days MA, and it's just trying to come out of its trading range bound. Right now, stock is trading at 267. One can get into the stock at present level with strict stop loss of 258. If it about target wise, first target would be at 273, and if stock break this level, then yeah, smart rally would be there up to the level of 287 to 300. So Wipro looks very attractive, and from mid cap, I think one should focus on the emphasis as well. The way stock has been trading on its daily chart avoids 100 200 days moving average, the way stock has been trading in today's trading session, further upside would be there up to the level of 2970, and if stock break this level, then one way rally would be there even up to the level of 3170. So yeah, one can get into the stock with strict stop loss of 2788.
9:38, ladies and gentlemen. It gets better and better for the IT space. Remember, we started with a 600-700 point gap up that proceeded to 900 points, and then very briefly it went above 1,000 point gain on a single day. That's 2.5%. So a fresh rally always begins on an index when it rises with a gap up and moves 2.5% higher. Of course, we will be watching very closely the end of today. Remember, it will also be a weekly close, so it's really important to look at that, and at the same time look at the components in the IT index which are doing extremely well. Of course, today's rally is led by Infosys. I can't remember the last time when we had a 4.5% uptick on Infosys. Look at Emphasis, 4% higher, 2902. Wipro, 3% higher, 268. L&T Tech Mahindra Coforge, all adding above 2%. Persistent, HCL Tech, and OFSS, 1.5% higher. Kunal will tell us his favorite IT stock on the charts. All of them have been beaten black and blue, so there's deep value in any case. Over to you, Kunal.
Well, its overall IT pack looks very attractive. We have already talked about the Infosys. We have already given a phrase call in Wipro, and one emphasis looks very attractive. Now, Sanjay, if we talk about a broader picture, Indian IT sector comes on second place on global level. And if you talk about future, and if we IT counters indulge with AI, then we may see a very good upside momentum in this all the IT counters. Now, trading perspective, these stocks looks very attractive, but if you talk about long term perspective, then I think one should consider Excel Tech and Techem for long term perspective. And anybody who want to create any fresh position, who want to create any fresh portfolio, then I think one should focus on Excel Tech and Techem for large cap counters, because the way this stock has been trading on its daily chart, outperforming the overall IT counters, not only this, outperforming the benchmark as well and creating the alpha as well. So one should focus on Excel Tech. Right now Excel Tech is trading at 1687. Stock has already given a breakout of its strong resistance, which was placed at 1600 level, and right now trading above it. So for a medium term to long term, these stocks may march towards the level of 1930. Whereas if you talk about downside, then downside is limited up to the level of 1600. And yeah, let's talk on the Techem as well. Right now, Tech Mahindra, the way stock has been trading on its daily chart, 1629. Even the same setup is there in Tech Mahindra, which we talk about Excel Tech. one can get into the stock at present level for creating any fresh position, particularly for the portfolio. We may see a very good upside momentum up to the level of 1760, and if stock break this level, then further rally would be there even up to the level of 1900. So both these Excel Tech Mahindra looks very attractive for creating fresh portfolio position.
Okay, that's on HCL Tech. What about on other earnings in the mid-cap space, Kunal? Anything you're tracking?
Well, if we talk about mid cap, based on this Nifty, based on this, overall market, mid cap is also performing at very good level. If you talk about mid cap 100, right now trading at near to 16,000 level, and stock specific definitely momentum are there. If you talk about 361, HDFC, AMC, Emphasis, Federal, and we have already talked about the Emphasis, but yeah, one stock is there which looks very attractive. It's from banking sector. It's Federal Bank. Since long we have been giving our outlook on Federal Bank, and even at present level this stock is very attractive. Right now stock is trading at 163. No doubt the way stock has been trading on its daily chart, further upside would be there up to the level of 180, and at this time if stock try to sustain above this level, then one way rally would be there even up to the level of 205. So from the mid cap, I think after this Emphasis, Federal Bank looks very attractive. If you talk about SL side, then one can keep SL at 248. Yeah, target wise, first target comes at 280, and if stock break this level, then 305 would be our ultimate target.
All right, we'll leave it there. Kunal, thanks for joining us. A decent start today. It's all about IT, really. We'll keep it there and we'll count down to see what happens during the rest of the day. Thanks so much for watching.
The world's most powerful double-engine coverage, where access meets expertise. Davos Brainstorm, 19th to 23rd January. Only on India Today and Business Today.
Well, hello and a very warm welcome to Business Today TV.